Hey everyone, so in this video, I will be going through a step-by-step guide of how you can raise capital when investors are cautious. And very importantly, this is about actually doing this fast and getting back to your mission as a founder or an exec. We used this exact methodology to help a pre-revenue startup meet 87 investors in under 60 days. And yes, they successfully raised. If you do want a shortened version of this video, I do have a 10-minute video going through the most salient points, but this video is specifically for those who want to dive a little bit deeper into how exactly we use this methodology internally at BeFound. So without much further ado, let me jump right into it. So I will have the document of this in the comments or in the description down below as well if you prefer reading, but for those who prefer watching and listening, you should be reading this guide because one, your time as a founder is very, very valuable. I designed this guide very specifically to be a comprehensive resource for successfully raising capital, even in investment poor regions. Whether or not we collaborate, you will gain the knowledge to navigate this process independently. If you are reading this, you're likely raising capital for your startup. And you're probably stuck with problems like being busy in the business, you lack a robust investor network, and managing a limited runway. I know this because I've spoken to hundreds of founders who tell me, like Y Combinator alumni Mustafa Al-Adhami, who had to go through 130 investor meetings to raise his $2 million seed round. You can watch the interview on my channel as well. Or Derek Omori, who's also on my YouTube channel, who almost gave up on fundraising for their startup Blurb with 1.2 million followers. He said, fundraising is the hardest part of being a founder. With this method that I'm about to show you, they managed to oversubscribe their round, reject investors, and raise $1.5 million. The interview, like I said, is on my channel. The purpose of this guide is to demonstrate a quick, repeatable process to raise capital in any market, sector, or region. It will step you through achieving investor thesis fit, building a laser-targeted system that gets your startup in front of investors, and of course, how to prepare for meeting those investors as well. To succeed, I want you to shift your mindset from you seeking investment to you're actually marketing and selling equity in your startup, just like you would with any product. This is about selling yourself. And for transparency, our clients do pay us 10 to 20K to run this process for them. However, I understand not every startup has that sort of runway, and so this guide is for those who need the help and want to do it themselves. This works best if you're a founder or an exec that has product market fit and a unique moat. You have a validated sales channel and operational capacity, and of course, you must be raising a pre-seed to Series A round. While this does work for further rounds, we find that this exact process works especially well in this sweet spot here. So if you're a founder or an exec and you want the shortest path to funding to focus on your business and mission, here's why this matters. Fundraising usually takes 6 to 9 months, right? It's not uncommon for it to actually take 12 or more. A founder typically on average spends 80 to 120 hours a month on fundraising activities, and they often have to do this every year. Using this methodology, we have helped our clients raise capital and close out their rounds. So I'm going to show you some case studies because at the end of the day, I don't want you wasting time on something where you don't know for sure whether or not it actually works. So one, Sidely, a 250,000 euro pre-seed raise. Before working with us, they were a pre-seed and pre-revenue startup facing the end of their runway. But after us, during a 60-day time frame and engagement, they met with 87 investors and had 2 term sheets by the end of that, and of course, successfully raised. You can see what Philip, their CEO, has said about us, and you can watch their testimonial video on my channel as well. Here's a screenshot of the multiple investor meetings that we booked in a single day, and that's little Philip's comment as well. Kindred Family Office, where we helped raise funds from high net worth individuals. So before, it's a private family office wanting to raise capital for their funds. And after, they had so many inquiries that they actually had to hire out a sales team to help manage these calls. We worked with them over a 90-day period. they actually asked us to switch off the campaigns, as you can see in this screenshot here. You can see even in the initial campaign results, 41 positive replies here asking to book into meetings. Here are some other campaign results across multiple sectors that you can see. I'm just going to go through this, and you can look at this in the document if you'd like. But again, client calendar booked out with meetings, I've highlighted them below. And this is what some typical replies can look like from investors as well. So, and that's with Antler. And of course, we're not afraid of learning. We've collaborated with Savvy Capital as well. They're a team of investment bankers and former VC professionals that have channeled over $100 million of investor capital for their clients as well. They've actually helped us structure our internal processes and systems, and even provided access to their database of over 10 million investors. So let's jump into it. Why investors are cautious? Right now, startups are struggling to close rounds. Valuations are dropping as you try to raise, and deal flow is slowing down. VC investment is actually at the lowest level in multiple years. So to raise capital right now, you must understand why investors are playing it safe. So post-COVID currency devaluation, the end of a long-term debt cycle, and quantitative tightening, QT for short, have stressed capital markets. And that makes asset managers like Vanguard, BlackRock, State Street, and so on tighten their balance sheets, affecting all investors. Simply put, there is currently less money in the market right now that is available. But how do you get funding regardless? Despite the challenges, startups are still getting funded, which means that raising capital is still possible and that there are some investors that are still willing to invest. You just need to capture their attention. How do you do this? By solving for investor thesis fit and engaging investors with mandates in your vertical and region through scale. When you do this, you seize the attention of active investors who aren't hoarding the dry powder. This is how we secure meetings for our clients within a week, refine presentations based on their feedback, and get sheets very, very quickly. You want to treat your raise like a sales funnel. And so what that means is, if you want to close the round fast, you need a lot of volume and a solid plan of action. It will take about 50 investor meetings to raise $1 million of capital. So that means the faster you meet investors, the quicker you can improve and raise capital. Meeting qualified investors who share your vision will also speed this up. You can't just go about meeting every investor if they're not interested in your sector or startup. So why spend a year raising capital when you can do it in months or weeks? Your team, product, and vision matter, but so does the hype. Investors want deals with momentum. So meeting many in quick succession and securing commitment is key. Most startups lack the digital marketing expertise to build an efficient pipeline. It wasn't necessary before, when investors were throwing money at startups with just a pitch deck. However, many founders are still using outdated methods like introductions, pitch events, and manual emails. For those of you willing to try something new, we've helped them save time and raise capital quickly with our unique skills and experience. We are the only firm dedicated to modernizing this outdated process. So, here's some context for all that bravado and big speech. I previously founded RevHunter, which is a lead generation business that helped startups find product market fit and build their sales pipelines. With a background in SaaS sales and being the top rep at Zendesk and closing 7-figure deals at Cisco App Dynamics, I was uniquely qualified. Using outbound frameworks perfected by Fortune 100 companies and unicorns, our lean team generated over $60 million in value for our clients in just 18 months. For example, in just 4 months, we helped a fintech startup, Sonnet, build a $25 million pipeline with large banks and financial institutions, leading to a major exit to SEPA Group. In our case study video, again on my YouTube channel, their CEO, Nat Hartley, said, "In fairness, you have ruined the last 2 weeks for me. From Monday to Friday, I've got 10 meetings a day." Having proven our outbound and copywriting capabilities, Some of our clients, of course, naturally asked us if we could try our hand at finding investors instead. And when I did, it worked beautifully. Equipped with my private email servers, AI outbound tools, and marketing expertise, we targeted investors, generated meetings, and helped to raise capital faster than they could alone. The market resonance was absurd, and it really captured my attention. It became very clear that the founders that I was working with faced a very common problem. They lacked capital, and too much time was spent chasing investors instead of focusing on their business. I, of course, wasn't the only one noticing. James K from the AWS startup team knew this as well. How? He personally advised 200 Series A scale-ups and 3,000 early-stage startups as part of his role. He saw firsthand how founders would struggle raising capital and constantly beg for introductions to the group of VCs that AWS worked with. James saw that this was a problem that founders desperately needed solving, which is why he left one of the best roles in the startup ecosystem to join BeFound. And with his help, we've been able to build very unique partnerships with VCs, startup accelerators, and partners for clients to leverage. To hear it straight from the horse's mouth, Brian Tanguay, founder of LogiSnap, describes this exact struggle of shifting focus between investor meetings and client interactions. He said, "I am never in the operations 100%, and that's why we raised the money now, so I can be in the operations for the next year." Founders should not have to be pulled away from their mission just to hunt for investors who take months to say no. Your time is better spent on product development, operations, and sales. So, why is fundraising still stuck in the past, relying on referrals and chance? I can only imagine the number of startups that fail because the founders had zero networking ability to extend their runway. The fundraising process, in my opinion, is broken. I believe that with the right domain expertise and effective sales and marketing strategies, you can significantly shorten the time to investment. From that belief came BeFound, with a mission to get founders back to their mission, fast. And speaking of fast, here are 5 simple steps to fundraise, but fast. It's important to note that BeFound's North Star when raising capital for clients is to secure term sheets, signed agreements, and have cash deposited in their bank accounts, not just investor meetings. It's a very crucial distinction. So, how do you reach your goal as quickly as possible? By achieving what we call investor thesis fit. We've broken this down into 5 steps. Step 1, finding your soul investors. Selling to someone with a problem you solve is easier, and investors are no different. The first step then, if you understand that, is to identify your ideal investors. You need to segment them by data points like industry, vertical, geography, stage, check size, whatever you can. And the better you segment them and understand the investor, the stronger your pitch is going to be. You want to use this matrix that I have to help you recognize the difference between 7 investor types. Then once you've done that, you can build a targeted list of investors whose mandates match your business and startup. Research each one's portfolio and investment criteria. If you prefer the old-fashioned way, this would typically look like a manual search, where you go on Google, YouTube, the yellow pages, and so on. But let's be honest, no one has the time for that, especially with tools readily available to help you streamline the process. I didn't even rely on these methods when I was building pipelines at Zendesk multiple years ago. This actually takes you away from what matters the most, building your business and optimizing for term sheets and cash collected. The second way is, of course, database lookups. You can use existing databases with curated investor lists, and it's a step in the right direction. Regardless of investor segment or region you're in, you can find mandate-specific investors in a list with any filtering or sorting. There are lots, and here are a few databases and lists I have used or currently pay for to help you get started. While these lists are a good start, I need you to be aware of a few challenges. 1, the mandate might not be current, and that's something that you can't help, as investor criteria can change very, very quickly as environments change. Two, direct contact information may need to be enriched if unavailable. You will see in some of those lists that they'll tell you where they're from and what their name is, but you will have to go hunt for their email addresses or phone numbers. The free lists are also widely accessible, so investors on these lists are getting contacted very, very often, making it very hard to stand out. Paying for lists and databases is probably your best bet here. The traditional method 3, your network and introductions. And I want to make this very clear. Warm introductions to investors are the golden standard. If you can get one, do it alongside other capital raising activities. The drawbacks for this, of course, are that you do need to require an existing network of investors to tap into. You will find it hard to find investors that actually align to your startup, especially if you're in something very, very niche. You might not find those specific investors in your local area. And of course, some people are not willing to risk their reputation to do introductions, and this just makes it extremely slow and not scalable. You might have to ask around for weeks and months to organize one investor meeting. Also, I don't know many early stage founders who have a vast network of investors, especially for a first-time founder, for their specific sector. This is especially true if you're in a region with minimal investor interest. The modern way of doing this is if you're willing to crank it up a notch, you will reap the benefits with better qualified investors and time savings. However, some of these tools have a learning curve, and of course, you might have to pay for them as well. Enterprise databases. Updated in real time with advanced filtering, these tools are used by investment banks and private equity and VC firms. They help you find investors with your deal criteria faster than most. You can get direct contact details as well, names, emails, phone numbers, and LinkedIn profiles for you to do some outreach. And of course, it comes at enterprise prices, but that's the cost of working through them. Advanced filtering is what's really, really important about these databases. If you had a browse through the earlier list I linked above, you will quickly realize that some of the data can be quite unorganized, and some of them don't have email addresses like I mentioned. This makes it very hard to target your ideal investor. This can of course be cleared up with data enrichment tools like Clay, ZoomInfo, or AI analysis keyword searches like Ocean.io and PandaMatch. My personal pick here is actually Clay. When you use this correctly, you can actually prompt it to look at a list, filter out for best investor fit based on the criteria you provide, and it will actually spit out contact information and enrich that way. I can highly recommend Eric Nowoslawski's Clay Guide for 2024 to get your bearings around this tool. Network mapping. I'd be remiss to not provide a modern day hack to finding warm introductions, of course. Like I said, it is the golden standard. So here's how to save yourself the time of talking to everyone in your network. If you have a list of ideal investors already, you can check their LinkedIn profiles and find mutual connections. You can reach out to these connections to see if there's a path to meeting. There's even some tools that help you do this. Because if you are familiar with Python, you can actually plug in a large database of investors and automate this. It will create a map of first and second degree connections for you to reach out to. Okay, so you now have your targeted lists. Now it's time to learn how to reach them efficiently. As an arbitrary rule, your goal is to meet 100 investors. And that might realistically mean reaching out to about 1,000. Normally, this involves tedious research and manual messaging that's very time consuming and inefficient. I'm going to show you and give you the tools needed to automate this process. So, it's important to understand, of course, that if your startup idea is strong, you will get meetings. But if not, it may be your first reality check on improving things, right? We're not telling you to spam investors, which is why it's very, very important to get the first step right in finding and building a list of targeted investors. You're not going to get funding by emailing everyone like your local butcher or investors who are not interested in your sector. So it's very important to get that list tightened up before this step. There are multiple cost-effective tools for sending on the market, but two I really recommend are Instantly AI and Smart Lead AI. Here's their guides on setting it up correctly, which I'm not going to go through as they go into very, very good detail below. So, modern LinkedIn outreach. It's not as scalable as email because there are restrictions to mass connecting and it could actually ban your account. but LinkedIn is a very viable way of reaching investors. So you can use tools such as HeyReach or Expandy, and just be sure to keep volume to the recommended levels to not get your account locked. That's gonna be about 30 to 50 connections a day typically. Make sure to optimize your LinkedIn profile, of course, before even starting this fundraising process. Your investors will do their due diligence. There's always, of course, modern paid advertising. It's reserved specifically for those who are looking for retail investors, so if that's not you, feel free to skip ahead. But if you are interested in doing this, we typically suggest running on Meta, as from what we've seen with our clients, you get the most bang for your buck here. You can put your ads on LinkedIn, Google, Reddit, or so on, but for initial testing, I recommend picking just one channel so that you don't break the bank as you try to figure out what works. I believe that Meta's algorithm and reach is still king here, which is why I recommend it. You just need to create a lookalike and custom audience from step 1 and let Meta's algorithm handle the rest. The starting guides are actually provided here. I've actually done those courses as well, which is why I really recommend Ben Heath. It's not a sponsored endorsement, it's just that I've done it and I think it's really, really impressive. Each modern method that I have discussed above is designed for high leverage to help you secure more meetings in less time. Step 3, make investors want to meet you. You found the perfect investors and you know how to reach them. But what use is it if reaching out to them means that they're still not interested in actually meeting? There's a certain level of etiquette that VCs and angels expect when founders contact them, and here's what to prepare and tips for creating that actual engagement. Of course, message structure. I taught you how to reach them, but not how to actually message them. A generic message will not win over many hearts or open many checkbooks, and that makes it very hard to get on a call on the calendar. Before reaching out, you need to research your investor, understand their interests, past investments, and explain to them why you picked them. Use the available data points from your list and database to create that sort of research. You could do this manually, you could hire someone to do this for you, or you can use OpenAI or Clay with clever prompting. Here are a few ideas for personalization. I personally really like talking about their recent investments that complement your business, which is why you're reaching out. If all else fails, fall back on a genuine compliment. Once you have that, add it to your outreach email, and here is a little template here of what an investor email can look like. All of those points are very important, but of course you want to keep it very short and brief. This is especially important if you're doing LinkedIn DMs, where you actually want to be a lot more concise. Think 2 to 4 sentences. And the tip is here, you can actually feed ChatGPT information about your startup, even give it your pitch deck, and have it craft sample templates for you to improve on. I have seen LinkedIn videos also work pretty well as well, but you need to A/B test and see what works for you. A teaser pitch deck is also very, very important. It's exactly like what it sounds. It's a brief document that provides just enough of an overview to attract investors. Include all the wow metrics and achievements here and send these out to interested investors. They weren't going to deep dive into your full pitch deck anyways, so this is why I can recommend this. I've seen some success similar to LinkedIn with short video presentations as well, but from our testing with clients, they should always complement the pitch deck rather than replace it. So you still want to send both regardless. And of course, the pitch deck. Yes, you will need a pitch deck. Everyone knows what there is, so I'm not going to go into too much detail. I've even given you some example pitch decks as well. There's a very great way about thinking about how to structure one to capture attention, and that's a blog post that I've linked to as well. And it comes directly from Rightside Capital Management, one of the most active investment firms in the world with over 2,000 direct investments. I've actually interviewed them to understand a little bit more about their funding style and how they like to invest. But for building beautiful decks, if you do not want to use PowerPoint or slides, you can of course use AI tools such as Gamma App, or outsource to a designer. We actually have an in-house designer here on the BeFound team for clients that need that extra flourish. Step 4, first impressions matter. You've got the investor on the hook from that engaging copy. Now it's time for some razzle dazzle. You need to refine your presentation. Your pitch and presentation are your first impression to potential investors, so make it count. You won't get it perfect from the start, I guarantee it, but you have dozens or even hundreds of first impressions as you go from meeting to meeting. You need to establish a tight feedback loop to refine your pitch. Use questions and sticking points from your investor meetings to find where you need to improve. Do not be afraid at the end of every meeting to ask for feedback as well. Social dynamics is something very important to consider. It's something that most don't actually consider, and of course they ignore the importance of. But how much does your investor value you and your authority? Everything that you've done and how you present yourself will shape their perception. Keep these principles in mind to boost your chances of securing investment. Presentation. Unfortunately, people do judge a book by its cover, but you can use that to your advantage with your grooming, attire, and environment to boost investor confidence. As you present, use body language, tonality, and pacing to convey authority and confidence. Authenticity and transparency is key, as misrepresentation can destroy trust extremely quickly. Credibility. While it might feel unnatural for some to mention your accomplishments and track record, it is extremely important that your investors see you as the expert. Your team, past successes, and milestone achievements should all be used to boost confidence in your ability and standing in their eyes. And of course, there's momentum. FOMO is real. The fear of missing out is real, and investors aren't immune. If you have secured investment from other investors, you need to make it known. So don't say you're seeking $1 million investment in your round. It's a lot better to say you have $750K already committed in your $1 million seed round, and you've saved the ticket for this specific investor. What you'll find is your time to term sheet will significantly decrease once you get one big yes. And last but not least, there's name dropping. This one might sound a little bit strange, but aligning yourself to reputable figures and entities goes a long way. If you've got seed funding from Y Combinator, say it. If you've closed Amazon as a client, say it. An extreme example of this is David Park, where he won multiple pitch competitions and $50K in non-dilutive funding, and in his words, all he did was talk a little bit about my product and then just name dropped a bunch of entrepreneurs. You can read more about it in the link I've provided. Step 5, lucky last, due diligence done. You're in the home stretch now, but now you have to actually handle due diligence. If you've done this before, you know that this is often the most time-consuming part of the process, but it doesn't mean you cannot speed it up. Delays only occur when your data room is incomplete. If you're optimizing for speed, which we are, by the way, a robust data room needs to be built out before meeting investors. So have all your documents centrally located and easy to share so that you don't have to go back and forth too much between teams. You can build this in free tools such as Notion or paid tools such as Visible VC and Dropbox. It's a very good exercise in understanding your business so that you're actually ready for investor questions. You can find a sample due diligence checklist here. And of course, steps to do yourself. To summarize the steps that I've discussed very plainly, in order to secure investments fast, you need to 1. Find your perfect investor, 2. Perform outreach at scale, 3. Engage investors with a well-crafted story, 4. Be presentable to instill confidence, and 5. Have due diligence documents prepared. Whether you use traditional or modern methods, it's up to you, but these are the essential steps to raising capital today. So to raise capital, there are multiple roads to funding. The first alternative is you could do an internal raise by bootstrapping it yourself, of course. That takes about 1,000 to 2,000 hours of your time on average, and that's usually over a 6 to 12 month commitment. There's always an investment bank where there's going to be maybe a $30,000 upfront cost for due diligence on your specific startup, and then you're going to have to pay a retainer and give part of the raise if it's successful. That's typically around a 4 to 12 month commitment. And a similar time commitment is placement agents, who are about $5,000 upfront and 3 to 10% of your raise. So an internal raise, like I said, is very, very cost efficient if you're cash poor, but it is the slowest. You will need to A/B test different methods and messaging. There's a learning curve if you're using new tools and techniques you're not familiar with. Again, there's time and travel costs just with anything else. But most importantly, your business is missing the most important asset, you, while you're fundraising. With investment bank, it's a very strong support structure, especially if you're new to funding. They will help you out a lot, but it's going to cost you thousands just to review your deal. There's a high monthly cost for the retainer. They also have network constraints because they typically only have 10 to 100 institutional investors within their network, and if none of them are interested, you will be dropped for optics. Placement agents are very, very similar as well because they come from the same background as they are in ex-investment bankers who become independent. They will still use traditional investment banking resources and techniques, and of course they reach out only to their existing network of investors from their time in the career. The other alternative is to work with us at Be Found, where we help you be found by your ideal investors. So how do we solve for your ideal investor? One, our proprietary system, backed by marketing expertise, optimizes for performance. We leverage multiple enterprise databases in order to hunt down hundreds, if not thousands of investors that have a current mandate in your sector or have invested in your segment in the last 2 years. We have an unparalleled ability to take a global approach in raising equity funds. Now, how do we solve outreach? As a previous lead gen owner myself and a team of sales geeks, we live and breathe outreach methodology. We have private email servers to improve chances of landing in your inbox. We have inbox managers on the team to respond and schedule meetings around the clock. And of course, there's automated sending and A/B testing that we use with AI. We know exactly where and how to reach the investors you need. Solving for engaging investors, we'll understand your story and craft compelling copy that grabs their attention. Having generated deals across various industries and years of sales and marketing experience, we already know what works. Solving for presentation. We give you dedicated resources and partners to help you develop your pitch and refine your presentation. When needed, we'll also place a team lead with VC or investment banking experience on your account. And of course, we lastly need to solve for due diligence. We ensure your data room requirements are up to scratch for when investors are ready to meet you and take it to the next level. Ultimately, what we do is about having a partner that gives you back time. And here's what we offer. The typical market rate of what we offer is if you have a custom list of 1,000 to 10,000 investors, that's usually about $1 a contact, and that's going to cost you $1,000 to $10,000. Having a private outreach server and infrastructure set up, about $1,000 a month. And AI personalization and automations, $200 a month. Copywriter, research analysts, and inbox managers, $3.5K and $2K respectively. And of course, getting an investment banker guidance is usually about $500 an hour. So instead of paying all of that to get the level of support and execution that we can offer you, you can get the same systems for a fraction of the price, $10,000 to $20,000, and most importantly, your time back. The caveat there is that we only take 5 clients per month. And I'm not just saying that, but it's actually because we want our team and experts to have the capacity to focus on a handful of deals at a time to get it over the line. This commitment also means that we have to be selective on who we bring on. But I guarantee you that you will meet investors this way. But at the end of the day, despite our support, we know that impressing investors is in your hands. We are confident in our process and will even guarantee meetings. Good luck finding even a meeting guarantee from anyone else. I promise you it doesn't exist, but if you do find one, we'll match it. To quickly summarize, the process that I've given you above will do exactly like what I said and get you to meet investors. But if you do want to work with us, what you will get is a dedicated team behind you helping you raise. You'll get a scaled outreach system on private email servers. You get a custom list of ideal investors interested in your sector. And of course, a meeting guarantee that we'll discuss on a call. For all of that, a $100,000 system, you get it for 1/10 of the price. So if you are raising capital and you do need some help to do it fast, you know what to do, book a call down below.